Today, I have the opportunity of interviewing the founder, president, and CEO of what I'm going to coin, at least for the context of this conversation, as a wholesale mortgage startup with a multi-decade legacy. Our guest today is Phil DeFronzo, who's the founder, president, and CEO of TPO Go. So if folks have been following the news at HousingWire, a few months back, Phil sold Norcom Mortgage to CMG, and TPO Go is the offshoot wholesale business from that transaction. Phil goes into his decision to sell the retail side of his business, his dedication to wholesale, and what he's hoping to achieve with TPO Go. Phil is a phenomenal story. We go all the way back to 1989, and we talk about how he entered the industry and one of his first mentors, who is the late Dave Stevens. And really cool to hear about Dave's impact on Phil in the industry over this multi-decade period of operating and leading in the mortgage industry. I hope you enjoyed today's conversation with Phil DeFronzo, CEO of TPO Go. Phil, welcome to Powerhouse.
Great. Thank you very much for having me.
So it's gonna be a fun conversation, and we're gonna start it back in 1989. And we're not talking about a Taylor Swift album here. We're talking about the launch of Norcom. Phil, give us a glimpse. How did your mortgage career start?
I got recruited to work at World Savings, and my first boss was Dave Stevens, who went on to do FHA and MBA, and I unfortunately passed, but I stayed friends with him throughout my entire career, and that's how I got involved. How he got me involved into the Mortgage Bankers Association.
That's phenomenal. So tell like in that, going back to the 80s, going back 30 years, over 30 years now, what was Dave like as a leader? Like, what did you like? How'd you like grow with him at that point in your career?
Well, he was. I still think of things that I learned from him when he was my boss. Aside of being, I can't say enough good things. He was really just super fun to work for. He was, if you were loyal to him, he was very loyal. And even though I left World and went and started my own mortgage brokerage firm, if I needed advice, I always would like call him, and during the whole process, like when I was doing things or making decisions, he was always there for me to be able to help and answer questions. And it was always, I talked to him a couple of days before he died. It's like, he was always been a friend throughout my entire career. And I really appreciate what he did with the NBA in the sense because, we were a, small, medium-sized lender, and he got voices. You have to have all voices in an association. It can't just be the largest members, people paying the most money. It has to be ones that are, you have to have all people in an association having the ability to have voice. And being on the Mortgage Bankers Association board and being chairman of ResBog for a couple of years was really cool. And just a lot of, I learned a lot.
Yeah, he made an incredible impact on the whole industry, the organizations he worked for and led, including the NBA, but also beyond.
About the housing industry. So, which is, and seeing him working, it's rare to find somebody that worked, started as a loan officer that rose up to work in government, and you couldn't put anything by him because he knew exactly what he was doing. And, he knew what DU is and credit scores. And sometimes when you're at some of these organizations, you hear some of the larger lenders, some of those, the executives, as great as they are, they just have never been on the street. They, don't know the impact sometimes.
It's just it can be such a competitive, hard industry at times. I feel like people, show their colors. Like when times get hard, people really show their colors. He and other leaders in the industry have like demonstrated an ability that when times get hard, when the tide goes out, like they still are positive, effective people who are like help the industry move forward instead of pulling us back in the dark.
I think it's important for all of us. It's like, the market's going to change, I've been around enough to know that some of the greatest opportunities you have in this business is times like this. Not, everybody, when times are great, everybody can make money. Some of the greatest opportunities for growth we've had as a company has been in the toughest times.
I I was literally like just doing an investor update last week and talking to my investors who are not in the housing industry. They're just like LPs outside of housing and mortgage, and talking about the dynamics we've been through the last 2 years, but also talking about what I've learned from some of the executives who have been in the industry for decades longer than I have, about some of the tactics and strategies and approaches that have been taken to win market share and grow in the down periods. I mean, you've been operating for over 35 years. Like, give me a glimpse. Like, what have you learned about growing in the tough periods?
I think you can't grow for just for growth's sake or market share sake. I think my mantra right now is, profitability and production will come. You have to weather the storm in a profitable basis, even if it's low profit, because a year from now or a year and a half from now, if rates go down, and they will at some point, and the refinances pick up, you're there to sustain that, and the production will come. And I think that's key. I mean, I just think that's kind of what led us to make the decision to exit retail, is that we didn't have the economies of scale on the retail side to be able to support, that growth. And, by focusing on the TPO business, TPO Go, we're able to grow that segment, instead of spreading ourselves too thin.
So over 35 years, like from the launch of Norcom in 89 to 2024. And I just read the article 6-7 weeks ago when the deal announced, but reread it this morning in preparation for this conversation. You made the decision to exit retail, sell Norcom to CMG. At the time, was it around 25 branches, primarily Northeast?
Yeah, I think, well, first of all, I wanted to partner up with a group that was high quality and could give my salespeople stuff that I don't have. Meaning they had more of a robust marketing department. They had products because of their size that we didn't necessarily have. And I had the benefit of knowing Chris George, being on the Mortgage Bank Association board with him, and realizing that, these types of deals work when you trust each other. And, I think that's really what it came down to. I just wanted to make sure that the people in the retail side that I worked with for many years had a home. So that's really what was facilitated that. And like I said, the economy of scale of, when I always say, like, you have one marketing manager for 1,200 LOs versus you have one marketing manager for 100, it's, that you can spread that cost along, and in this marketplace, you need to do that,
Well, we've been talking about and watching M&A and deal making for the last couple of years. I think, going through 2023, we expected that to be a bigger year of consolidation. We expected the first half of 2024 to be a bigger period of consolidation and deal making, and it's kind of been slower than anticipated. And some of the deals that have worked or have actually closed, there's been retention issues of originators on the other side. I'm sure you've seen some of those in the market. How did you think about finding the right partner? And you alluded to your relationship with Chris from the NBA, but I'm curious about how you kind of went through the decision-making process to sell, and like what you told yourself in your head, these are the characteristics that need to be there.
Yeah, that's a really good question. I think for me, it was always, and I'm not saying this like altruistically, but it was like, there was the big part of it was like, if I was going to sell, I wanted it to be to somebody that was, which pains me to say, better than me, better than what we were. And once again, like, you look at a company like CMG and the depth that they have in their programming and their marketing department, even like their programmers, what they can do, for us to recreate the platform that they had purely as a marketing perspective, from a marketing perspective, I couldn't do that. Like, I mean, I could, but the investment involved, I didn't know if it was going to reap the reward based off of the number of LOs that we had. So I think that you will see more consolidation in that space if you want top producers to stay, and that's really what it came down to. And it's funny because we did have a few LOs that left, but quite honestly, which I think is really interesting, is most of the top producers stayed because I think they saw the benefit of what they could get from the new company.
So in like the complexion of deals, I mean, we've seen deals where, founders selling or out and they're on a beach. We've seen founders that stick around in some operating capacity. You chose a third door. Like tell us about what the post deal like strategy is for you.
I love the industry. And for me personally, it came down to, we almost were spreading ourselves a little bit too thin. And if you have a limited amount of resources, you're not a big private equity firm, you have to decide where you think you're going to be able to use those resources. And on top of it is, volume is down. Distributed retail from a cost perspective, it's expensive because of benefits and rents and, all of those things. And, and we just quite honestly made the decision to stay in the business and stay in the business on the wholesale side. And we really do have something to offer. I mean, we're not looking to become, Rocket, or TPO or United Wholesale. It's like we can be a really strong customer service oriented company on just boutique-ish with TPO. There's certainly there's a lot of things, like by just focusing on one business that we're able to achieve, and we really are starting to see the benefits of that.
Under the Norcom brand and umbrella, what did your wholesale strategy look like? And yeah, start there.
Well, wholesale, we rebranded it as TPO Go. We're looking at we're doing renovation. We do basically every renovation product out there, from USDA to VA rehab to 203K and home style and Freddie Choice. We have an amazing renovation person, Sherry Eccles, who's running that department. We have a dedicated renovation desk, which I think is huge for brokers. I mean, I started as a broker. And was broke for 15 years. And at that time I wasn't doing that many renovations. So like to have somebody to help you with what documents you need to get to the builder, or will even do it for you and send the documents to the builder, that's really increased the customer experience for the broker. And it's actually helped us get market share in the renovation space.
Which seems to be I'm not armed with the data right now, but like we're sitting on a pretty aging housing stock across the U.S., incredibly constrained inventory. Our lead analyst, Logan Motoshami, talks about it all the time. Tell us more about the market opportunity and like why you picked this lane.
Yeah. Well, I mean, it's probably 20% of our business.
Okay.
We still do conventional. We have great, strong FHA. I think we have really deep underwriting experience, and that's helped us compared to some of our bigger competitors who may only want to look at things on a cookie cutter kind of basic. If it meets this requirement, it'll pass through. And I'm not saying that from a credit score perspective. I'm saying like, okay, well, what happens when you have somebody who has a self-employed borrower who has 10 different businesses? You want to be able to have an underwriter you can talk to or talk through that. But as far as the renovation space, I mean, it's so enormous. I mean, we're in Connecticut. I mean, we've seen the constrained inventory where like, okay, the house is perfect, but the borrower wants a 2-car garage, or the house is perfect, but it needs needs a new kitchen. On VA, I say to people, if you're doing a VA loan and you're working with anybody who doesn't have a renovation product available to them, then you're crazy, because so many VA loans, it's like the house is perfect, the VA appraiser says I can't complete, the roof needs to be repaired, and the person who's selling it doesn't have the money to do it and could blow the deal up. Or you work with a VA rehab lender, you'd be like, let's reduce the price, let's put the roof into a rehab. So it's enormous right now. I mean, I think the aging inventory is part of it. Aging, housing stock is part of it. But man, I think the constrained inventory is huge. It's like, because people want to buy, and then all of a sudden they're like, I want to buy this house, but the kitchen sucks. Like that kind of stuff.
Yeah, it's and it seems like some markets have the buyers who are willing to do the work. Other markets, and I think we're seeing this here in the Texas market where I'm based, the buyers who are willing to get comfortable with home price appreciation and pay the higher rates are looking for a finished product, and that might mean like they demand move-in ready, or it means they're willing to tack on the renovation loan and move into like their dream house. But nobody wants to pay the price, pay the high interest rate, and then move into a 1989 kitchen.
Yeah, the thing that we have a service that we have a national company that we work with that will help do like even feasibility studies on listings. That's been really beneficial because like some people can't even see it. Like I can't, like, like if I look at a house, somebody will be like, oh, well, you could do this and this and this. And I have a hard time with that. I visualize it as in its crappy condition. Whereas this feasibility study has helped a lot of our brokers and our listings because they'll say, oh, wow, I never thought that. And oh, wow, that costs that, and I could finance that. So I absolutely agree with you. There's people who want but there's some that just don't understand what you could do. And I was talking to somebody, I was getting my haircut, talking to somebody the other day, and they were saying like, I didn't know you could finance, I wish I knew that. I just looked at a house. There's so many people who don't understand, like on an FHA 203K, you only need to put down 3.5% of the total price, and that's purchase plus improvements. And they'll let you go. Those products perform so well, they'll let you go to 110% of value. That's enormous. I mean, it's just the amount of opportunity that are out there. It's crazy.
So I know you said renovation is only about 20% of the origination volume right now, but staying on the renovation path for a second, what's like the level of education and awareness that needs to happen with agents and originators around like this product suite? And like, does that knowledge exist today, or is that a hurdle?
Yeah, no, we actually have a certification class. So we'll let you get, it's two parts for a few hours. Sherry Eccles gives it. And you get a TPO Go renovation certified expert for the broker. I think also we should spend some time teaching the realtors that it's not the way that it used to be. It's not, the 203K of 20 years ago. I mean, it's definitely streamlined. Fannie and Freddie products, the Fannie and Freddie renovation loans are enormous as far as the less requirements that maybe a 203K. But yeah, I mean, it's not like what it used to be. One of the things also that we do, which I think is a huge thing, not to plug us, but we also handle the disbursements internally. And so we always say that, like, from application until the renovation is complete, we're going to hold your hand. And that's really important because a lot of lenders outsource that piece of it. And then you don't know, you're closed loan and you don't know what you're doing. I always feel like when I was out there selling renovation as a loan officer, I don't want to get that call from that realtor down the road saying, oh man, the builder's pissed because we didn't get that. You know what I mean? I want to be able to be like, oh no, I can call Phil and he'll check with his disbursement department and figure it out. Like that's a big deal. And that once again, that comes down to the education of people who do renovation loans know that.
So you mentioned like some of the differences in the strategy that you have from like the United Wholesales or Rocket Pro. Like, talk more about the culture you're building with TPO Go. Like what should the industry and brokers understand about like kind of the strategy and playbook that you're running?
I think what we're not there yet, I'll be honest with you, but we're really trying very hard to make it where people pick up the phone, people develop relationships with their customers, the brokers. Hey, that was a great loan, thank you. I think you have to kind of understand that, it's the same thing on the retail side. If you don't have loan office, you're an operations person, you don't have a job. And it's the same kind of thing on our end, which is you really have to make sure that, you pick up the phone, you say thank you, and you appreciate the business. So it's, I mean, that's really what we're really trying to do. And, it's a struggle a little bit just because you just have to kind of remind people that it's just so important to, say thank you and realize that you're customers.
So the Michigan players have bet big on the centralized sales and operations. How do you think about like ops strategy and go to market? Are you putting AEs in field, running centralized? Like what's the operations playbook?
A little bit of both. We do have a call center that we're calling on, that we're launching, getting off the ground. But a little bit of both. I mean, we do have AEs that are on the ground that are, but even that spread out, our AEs are not as much territory as they are like, I have a customer in Florida, I have a customer in, that kind of thing, but it's more relationship based. So a little bit of both. I mean, it's, I don't, I think that our strength is a little bit more in those personal relationships because of our size and type of business that we're going after.
Yeah, I like it. So you mentioned Florida. So you're not like you were previously, or at least on the retail side, very Northeastern focused. Are you running a national playbook for the wholesale business?
We had offices in Florida. We had offices up and down the East Coast, but so yeah, I mean, we're very comfortable. We do the Florida housing program. We do the Connecticut housing down payment assistance program as a third party. We do mass housing as a third party originator, available to brokers. We're very passionate about that. I'm on the Connecticut Housing Finance Authority board. We're passionate about first time home buyers. I want to say that when you look at the broker community and where they are located in comparison to some bank branches, they're in the targeted areas where people want to do where the finance agencies want to do business. And there should be more of an expanse reaching out to those people that are in those targeted areas. So the customers could have access to those products. And I know people think about that, but I always think about like the bank branch in the town next to me isn't driving into the city of Hartford where we are, whereas we have two brokers that are in the city of Hartford. And that if you truly want to tap into those markets, you need to look at the sales force in those markets.
So you're referencing that in some of the most like underserved housing markets in the country, like much more higher probability there's going to be a mortgage broker, a wholesale lender in that market versus a national retail depository.
Yeah. I mean, let's be honest, a large bank isn't putting as many of the branches into cities. I mean, whereas, in targeted areas, and I can just speak, I mean, it's anecdotally, but I can see what business we've gotten recently with the HFA business that we've gotten have been in targeted areas more so than when we were doing retail. And I think a lot of it has to do with, like I said, that brokerage community is in areas.
I mean, we obviously like at HousingWire cover every move from the GSEs and government lending products, but I think we do it from a pretty like channel agnostic perspective. Like, are there conversations at like the FHA level or with GSE partners on like, hey, this is an area where like wholesale actually can help you be more impactful, or like, is that a conversation flow that you've had as an operator or on behalf of MBA?
That's I am doing it more in my own state. We actually just took a map of approved brokers we have at Connecticut Housing Finance Authority to try to share with them. Like, listen, if you want to serve some of the underserved markets, look at these brokers are in that market to be able to do it, to try to encourage them. Because, I think there's still like the broker of 20 years ago is not the broker that is now because of NMLS licensing and minimum requirements. You don't have the guy who, is in it for a year and leaves. I mean, you have much more career people. And I don't know, like, I think it's interesting. We like try to do that in our state, but that's an interesting conversation to have because, maybe it also be some of the banks that need to help with their CRA. Maybe they'll look to brokers that, maybe that map of showing where they're located may help them try to look at that business, try to buyers for that business.
We've heard like the trade associations that cover the brokerage and wholesale market, like, talk about like the growth of the wholesale channel and different market cycles where wholesale is significantly more advantageous to the borrower and the originator. Like, how do you think about, like, you've operated in multiple channels, diversified channels. Like, how do you think about like the market we're in for the broker right now and like what's going to help brokers win?
I think it's really good because I think, broker could stay lean and mean and offer competitive pricing. Sometimes larger institutions um, have a lot of expenses associated with, then they have to charge a greater price. I mean, if it's hard to say like that, because you're at a large company, you're getting so much more marketing support. If you're an individual broker, you're not seeing that as much. But right now, I think it's a great time to be a broker, because you can operate pretty lean. There's in Florida, you can get licensed as a broker with minimum net worth, and you can get licensed in Florida out of your house. So it's like you got home office. I mean, you don't have to charge. You can be very competitively priced.
Yeah. So we talked about product diversity and like the renovation loan, like in products. But as you look at the brokers that you work with, are there any other like tactics or strategies that are helping like the most productive originators win in this market right now?
I think it's just, I think it's product knowledge. Sometimes I feel like people are too quick to, and I've seen this recently with some of the deals we've looked at, too quick to look at non-QM products when there's products that are available internally. You're like, wait a minute, why would I put somebody in a non-QM loan when, if I do truly verify their income and their back ratio might be a little bit high, I can put them into an FHA product. So I think the brokers who have real strong product knowledge are winning. So I think that would be my answer.
Yeah. All right. That's awesome. Well, so Phil, as we look forward, like, I mean, I know you've been operating this wholesale business for a little while now, but like, first couple months of doing it, like dedicated with the retail business, what should we expect from TPO Go? What should we expect to see in the coming months? If it's, hiring or whatever it is, like give us a glimpse into what we should be watching.
Yeah, we're really continuing to staff in the underwriting space. Operationally, we are trying to make our automation even better. Just our portal, we're trying to just tweak it to make sure that it gets a little bit better every day. That we're trying to have it be an easier process for the mortgage brokers to be able to do their own disclosures. So a lot of pieces like that. Like I said, we're really trying to staff up to improve our turn times. Because, it's like we want 24 to 48 hours in underwriting to speed things up. So those are all part of the things that we're doing. But it's exciting. I mean, it's exciting because we're also trying to do stuff like, from a marketing perspective, trying to see what we can do to assist our broker partners in the marketing. We kicked around ideas like, well, in the states that we have the HFA products, maybe we can try to help them, put together seminars that they could use to go out there and sell the product. So
that's really interesting. On the you mentioned automation. So on like as you get the opportunity to kind of build this tech stack, what are the most important like pieces of the automation process that are actually going to improve your turn times? Like where do you put energy in the tech stack?
Well, two things. First of all, it's not just tech stack. It's using outsourcing. I think it's been helpful for us. Some outsourcing of file starting and pre-underwriting and pre-closing reviews not only has improved the turn times, but it's improved the quality of the loans and in essence, improved the turn times. But then it's also the tech stack. I think if you give the broker, we give the broker the ability to do the disclosures that they want or not. I mean, like some brokers don't want to have the responsibility of the broker. I personally, as being a former broker, I would want to do it just so that I could speed it up and control the process. But we give people the option to do both. I think we're looking at also options of like maybe some of the things that we could buy, like why do we have to manually order a flood cert? Why can't we make that when the file is open that it automatically happens? So we're trying to look at things from that perspective too.
Yeah, I mean that's the flood cert their process alone. There's definitely a few technology vendors who are popping up on automation and even some like AI capabilities on like when like it's not just order the flood cert, it's knowing when to order the flood cert and for which properties, and that's where machine learning and AI can play a role.
Yeah, absolutely.
Yeah. Yes, that's a topic. We're doing a HousingWire AI summit this summer in July in Dallas, and I know that it's not automation's one thing, but then AI in the in the verifications and certification and process and underwriting process is going to be really like a big topic in this AI summit.
Yeah. And you wonder what it'd look like, a couple of years from now, and it would be.
Well, and that's where, it's where I think it's really important to set goals as an industry. You mentioned like getting down to 24 to 48 hour turn times. I wonder like what's the point of diminishing return? Like if you get underneath 24, does that matter? Like, does that actually like grow your business faster, or is 24 the goal? And like, if you get to 24, it's all you need.
Right. I think 24 to 48. I think actually as a former broker, I think you go beyond that. It becomes like, well, do I really want to get an answer like, 3 days later, 4 days later? I think it starts affecting your business when you get too high up there in the turn times.
Yeah. Being able to tell a borrower, like, we'll be back to you tomorrow is a pretty solid commitment.
Yeah, it's Monday. I'll get back to you on Wednesday. I mean, that's different than, it's different than if you were like, oh, I can get to you next week. It's like, and that's where it starts affecting your business. I think, but I do think that a lot of automation can, even if you have the human touch on an FHA loan, but if you have automation pre-screening that loan to where you can look at things and then give it to an underwriter who has to make the final decision, you're improving the quality of that. You're improving the quality of that loan and speeding it up.
Well, Phil, thanks for giving us a glimpse into TPO Go. I feel like I'm getting to see like the wholesale startup with like a multi-decade legacy, like come off the ground right now.
It's really exciting. And I always tell people, give us a try because like I said, we're here, we'll pick up the phone and
boom, that's a wrap.
All right, take care.